Hey folks, welcome back to Real Estate Investing Unmasked. Today, I want to talk about how mortgage brokers, not the banks, how mortgage brokers get paid. If you've ever bought a house, you've probably paid something called an origination fee or a yield spread premium. That's one of two ways that a mortgage broker gets paid. So what are they? Before the whole fiasco in the mid-2000s when the market crashed, mortgage brokers would get borrowers into loans that were higher interest rates, and they would charge 4 or 5% of the loan to originate that loan. So for instance, if you had, just to make the numbers easy, if you had a $100,000 loan and you were charged 4% as an origination fee, that means you were paying $4,000 to that broker for the ability to have that loan. That was back in the day. Now, because of the market crash in 2007, 2008, when the real estate market went meow, the Dodd-Frank rules now say that you can only get paid as a mortgage broker. You can only get paid one of two ways. You can only get paid by the customer, or you can get paid by the lender. That's it. You can't get paid by both the lender and the borrower. So the way that works is you have one or two choices. To get paid by the borrower, you pay an origination fee. And that means when you're buying a house, let's say you want to buy this property and you want to get a really good interest rate. The lowest interest rate that you can get, you'll get by paying an origination fee. You see, that person who's on the other side of the table helping you get that loan, they got to get paid to feed their family too. So you're either going to pay them up front or you're going to pay them through the loan. So if you want a lower interest rate, you're going to pay an origination fee. How that works is they charge anywhere between 0.5% and the highest they're allowed to get paid is 3%. Okay? So if you have that $100,000 mortgage, you're going to be paying at tops $3,000 for them to fill out all that paperwork for you now, or to help you fill out that paperwork and explain it all for you. There's a lot of stuff they do on the back end that helps them get paid, that helps cover all those expenses. But that's how they feed their family. On the low end, it'd be the 0.5%. Now, usually in places like California, where I am, if you were to get a big house, they're all expensive. You probably won't pay the 3%. You probably get closer to the 0.5 to 1% here. Now, in the Midwest in the United States, where say like Ohio, it may be closer to the 3% because honestly, a $100,000 mortgage is not a very big mortgage. So you might actually pay $2,000 or $3,000 to that mortgage broker. Whereas a $1 million loan in California, that 1% would be $1,000. So it depends on where you are and what mortgage broker you're going to. Now, a mortgage broker is different than a loan officer. A loan officer is paid directly by the lender with a salary. So you're not going to be paying them directly through the loan necessarily, but we talked about origination fees. The origination fee, once again, is you are paying the broker. And that's all going to be disclosed in your HUD form. The HUD form is the form that you get when you close escrow. It shows all the fees that are involved in buying the property. Now, so that's the origination fee. The second one is the yield spread premium. The way that one works is you get a higher interest rate, but you pay practically no fees. You don't pay a fee for the broker anyway up front, which means you get a higher interest rate. The way it works is the bank or the lender who's going to be lending you money, they know over time you're going to pay a lot of money with that extra interest, with that extra 1 or 2% interest rate. So they will pay their broker up front that 1 or 2%. So they get the money whether you're paying it or whether the lender's paying it. They're going to get it up front after you close that loan. And then you're going to be stuck with a higher payment over time. So let's say that you had a 4% loan that you could get with origination fee. If you decide to go with a yield spread premium and not pay up front, and you say, oh, I don't want to pay any cost out of pocket, they'll say that's fine. Instead of that 4%, you're going to get advertised that 6% or that 5.5% loan. And then with that 5.5% loan, you're going to pay over time. And they'll tell you, hey, 5.5%. And if you want to bring that down to 4%, then you're going to have to pay up front that origination fee. So that's how you get lower interest rates when you are buying property. Brokers got to get paid. you got to get that property. You're going to pay over time or you're going to pay up front. Now, the question is, which is better? If you're going to hold the property for a very short period of time, it may be better to go ahead and do low fees and pay over time that broker payment, the yield spread premium. The reason being, if you're only going to hold the property for say 2 or 3 years, then okay, you'll take the higher interest rate, and the difference in the interest rate and what your normal payment would have been is very small. Potentially $10, $20, $30 more a month than what you would have paid. So in the end, you actually will pay that broker much less if you hold the property for a small amount of time. If, however, you know you're going to be staying in this property for a long time, or you intend to, then you're probably going to want to go with the origination fee, because then you can knock it out all up front and have a lower payment over time. So make sure that if you're going to get a loan and you're going to go through a mortgage broker, that you contact them and have them do the analysis to tell you the difference between getting an origination fee to pay for their fee or getting the yield spread premium included in the loan to pay their fee. But I promise you, they will get paid. Hey folks, if you have any questions about real estate investing, buying a property, loans, mortgages, all that stuff, even whatever question you have on real estate, ask it down below. I'll be glad to answer it, and I'll see you next time. Don't forget to subscribe.